at some point, the economies are really going to roll over, and the central banks will lose control of propping up these stock markets, and that's why you want to be investing into more sound assets.
Well, it's a new day, it's a new dawn, and we're in a new era. Welcome to the Real Money Show with Guildhall Wealth Management. My name is Darren Long, Vice President of Sales, and with me on today's show, Steve St. Angelo from the SRS Rockwell Report. A special treat for our listeners. I'm back in the seat again after being at home predominantly for the last 3.5 months, and it's been fantastic time. The world of gold and silver is fantastic for us and hopefully getting better for everyone out there as they listen and understand the merits of ownership and why it's so important to get a hard asset like gold, silver, or a natural fancy color diamond into your portfolio. Lots to talk about on today's show, where we stand, what's been said this week about all of the red ink and the guts spilt in Ottawa, Harper's billion credit crisis, Trudeau's $343 billion pandemic hole, and the comparison, folks, is World War II. We haven't been there facing this kind of challenge since that time, and we're up against it. We've had a credit downgrade in our economy. A third of the workforce has been idled or shut down. The jobless rate's going to remain above 10%. This is not a rosy picture to paint, yet the stock markets keep rising. So let's introduce Steve and get his opinion on what's happening. Of course, his opinion is going to be slightly slanted towards the U.S., but it relates here in Canada. He's going to talk about oil industry. So without further ado, let us introduce Steve St. Angelo. He's from the SRS Rockwell Report. He discusses a lot of different topics, and one thing in particular he's going to touch on today is what he's been studying since about 2008, which is called the area of falling energy return on invested, and its impact on mining industry, precious metals, paper assets, and the overall economy. What's happening in oil? What does it mean to gold and silver? We're going to find out. He considers studying this kind of impact a very important aspect of understanding the global economy. You could have heard him. You could have heard him on TF Metals Report, Zero Hedge, Gold Seek, all over the internet. He'll tell you where to find him today. Without further ado, Steve St. Angelo from the SRS Rockwell Report. And we are lucky enough and fortunate enough to have in the studio with us Steve St. Angelo from the SRS Rockwell Report, and of course, well-known analyst. Lots of things to discuss. Steve, I want to welcome you to the Real Money Show today, and I want to thank you for taking the time to speak with us.
Yeah, no, Darren, thank you. There's a lot happening in the market, so we've got plenty to talk about.
We certainly do, and I'll get started right away with the first question I have for you, because up here we've had a different experience in Canada somewhat than in the U.S., but I want to just kind of take a moment to recap the last 3.5 months and find out where you've noticed the biggest difference in terms of the economy and by extension, perhaps the largest effects of the situation, the pandemic, COVID, Corona, what everybody else calls it is different day to day, but this situation and how it's impacted our economies, it seems as though the public is not really grasping the magnitude of this event and what it means to the world economy.
Yeah, I agree. And there's two different situations happening here. There's the first situation, which is the actual the government mandated shutdown of different parts of the economy in different parts of the world. And certain, like in the U.S., we had a huge disruption. Airline traffic in April was down 94%. That's just off the charts. And I looked; they don't have the data out for May, but the fuel consumption in the airline industry only increased 1.5% in May. So that goes to show you May was horrible too, and I don't think June will be that much better. So the two things that are happening: we had a shutdown, a lockdown of the economy in the United States and abroad, and that impacted the GDP, the economic activity. Now, we're starting to see more people driving, people going back to work, so that is happening. We're starting to see a reoccurrence now, a second wave, but I do think, even if we didn't get that second wave, but there is all this damage that has taken place in March, April, and May, and now in June, and now we're into July, that we're going to see a more negative, longer-term ramifications start showing themselves, I believe, in the third quarter, towards the end of the third quarter, especially in the fourth quarter. And so I think we're going to see a lot more negative implications, negative economic trouble taking place as all these things that are in the pipeline that the public doesn't seem to be aware of will start manifesting in the earnings, in the actual stock prices. Because I'll give you one statistic, last statistic here. Back in 2009, when the U.S. unemployment rate hit 10%, that was low. The stock market, the Dow Jones, had lost 50% of its value. Well, even though we've come off the low of the unemployment in the last month or two, it's still at 11% in the U.S. The stock market right now is only down 12% with 11% unemployment. And I believe that number is inflated. And that's probably going to get even worse. So, yes, there's a big disconnect in the fundamental of the economy and what's happening in, let's say, the broader market.
Feels to me as though there's no anchor holding the world markets in place. You see, it's kind of like a vacuum effect, and the same thing's happened here with the stock markets overall in Canada down maybe 8%, given the fact that we're expecting to stay in double-digit unemployment throughout probably the rest of 2020 and for the better part of 2021. So this world market, I mean, it's certainly, we're not living in a bubble. This is happening all over the world. And the result is that we're seeing all these crazy evaluations. We're hearing stock prices basically stay high, and these topsy-turvy outcomes that rule the day. How do we get back to some normality here, and how does the average guy on the street protect himself during this uncertainty?
That's an excellent question and a perfect example of that. I think the market has got enamored with technology. Nothing wrong with technology. It's done a lot of interesting things for us, but it's there's no foundation for the valuations of a lot of the technology. And the Nasdaq is hitting pretty much highs, even though the S&P and the Dow Jones are still off their highs. And so a perfect example I wrote about this is Toyota versus Tesla. Now, I went back and looked at their stock prices. They basically started out about the same. Toyota and Tesla were trading about $20 a share. Toyota was trading $20 a share in '93, and Tesla was trading them $20 a share in 2010. Tesla it's over $1,400 a share now today, and Toyota is only trading at about $125. And the interesting thing is Toyota sold 2.4 million units, automobiles, car and trucks last year, and Tesla only sold 192,000. And so Tesla's market cap is, I think, $260 billion compared to Toyota's, which is $206. And the last thing is Toyota's profit last year was about almost $20 billion. That's, Tesla only made $24 billion in revenues. They lost money. They almost lost $1 billion. So right now, unfortunately, the market is not grounded in fundamentals. It's like the technology is driving everything. And so if the sales keep going up, if you see double-digit sales based on this technological growth, then people are going to just jump into the stock price, even if it's not making money. And so the problem is now we see this huge disconnect, and investors are going even more. If you look at a monthly chart of Tesla, I mean, it looks like the Empire State Building in just the last few months. It's gone from 200 to 1,400. So this is not reality, and that will come down hard. And so I think investors, which is a small percentage, need to start understanding they need to protect their wealth. Because the markets eventually, even if they go even higher, at some point in time, the valuations aren't going to matter. And it's going to be protecting your wealth in real assets of gold and silver. And that's why I believe at some point the economies are really going to roll over, and the central banks will lose control of propping up these stock markets. And that's why you want to be investing into more sound assets.
All right, again, with all of this uncertainty and people not really in the know and all of this craziness happening, I think that gold and silver become obviously one of those portfolio moments where you say to yourself, if I don't have them, maybe I'm making a bad mistake. How do you feel, Steve, that gold and silver have held up during this entire time?
Well, in my analysis, gold and silver are valued two different ways. They're valued as a commodity, which most things are valued as commodities. and that's based upon what it costs to produce them and then supply and demand. Because no business is going to produce something and sell it at a loss on an ongoing basis and stay in business. So you have to be able to sell goods above their cost of production. And so gold and silver have been doing that. That's what the market has been basing the value. And that's why we see this 80-to-1 plus or minus ratio, because it costs about 80 times more to produce gold and silver. But that's a commodity. But gold and silver are also money, a store of value. And that's a whole different ballgame. And right now we're starting to see gold more than silver, but silver's going to catch up. We're seeing gold move more towards money. And according to my analysis, the top gold miners break even is about 12 to 1,300. And so now at 1,800, the miners are making pretty good money. The margins are very good compared to what it was a few years ago when they were getting $1,100, $1,200. They're making a little bit of money. Now they're making pretty good money. So what's happening with all the money printing, people are realizing in the debt that's happening in the world that at some point the currencies are going to get in trouble, as well as the treasuries and bonds. And so I think you're starting to see more investors move into gold, which is pulling its value up as money away from its commodity price. And silver, it's just in its beginning stage. Silver still has that ball and chain of an industrial metal. But over the last 50 years, because it's been in a lot of industrial metal, all that metal is gone. Most of it is gone, won't ever come back, which makes silver, to me, a better asset, because right now there's about the same amount of above-ground investment stocks of silver and gold in the world. So when push comes to shove and people start wanting to acquire physical metal, there's not that much more silver than there's gold. And so this is a dynamic that the market does not understand yet. I think there's a few people in the precious metal community that understand it, but as a whole, the market financial analysts have no idea about this relationship.
Okay, we're going to continue on with this interview with Steve St. Angelo in 1 minute, but the number to call to get more information, to connect with Steve, to get more info on buying gold and silver, 1-877-78-SILVER. We want to remind our listeners, you can have silver for direct delivery home. You can store it. You can put it in your RSP TFSA. You can use an existing RSP TFSA LIRA, LIF, RIF, or any other registered account and pull some funds from that under the umbrella, work with Guildhall, and own some precious metals. So we're going to get back to that interview after we take a short break. I want you to stay tuned. Again, the number 1-877-78-SILVER. If you've just tuned in, you're listening to The Real Money Show with Guildhall Wealth Management. The number to call, 1-877-78-SILVER. If you want to get into the newsletter or hear more from Steve St. Angelo, who we've been interviewing today. And if you want to buy gold and silver, again, 1-877-78-SILVER. Let's get back to the interview with Steve St. Angelo from SRS Rocco Report. All right, Steve, if we then, again, our listenership understands gold and silver a little bit better than the general public do, and I'm sure we're spending a great deal of our time equally at Guildhall and with you at SRS Rocco, trying to educate people, trying to help them to understand these things better. But speaking of things the public really is unaware of, you recently wrote actually about silver supply changing and how some of the largest producing countries are seeing their silver supply drop. I think it is very fitting that given the fact silver managed to break through some fairly significant pricing barriers this week, that we talk about this for a minute. Can you tell us what's happening with silver supply around the world?
Yes, silver, interesting, different than gold. Gold has been continuing the production. Global gold production has continued higher, and last year was the highest, about 111 million ounces. Silver peaked in 2015 and has been steadily going lower. And this year we're going to see a significant drop-off, and that's due to the manual shutdown of primary silver mines and mines in general, because people need to realize that 55% of silver, global silver, comes from a byproduct of zinc, copper, and lead production. And so in Mexico and in South America and Peru, Mexico and Peru are the two largest silver-producing countries in the world. Peru had a significant curtailment in April. It was down 74%, and then it was down about 60% in May. But if we look at both, and Mexico dropped pretty well in April. I thought it would drop further, but it fell from 500 tons in March down to 300 tons in April. So we're going to see a 25 to 40 million ounce decline from these two countries over March through May and even June. Now, I think the issue is that was a forced closure. I think the next issue we're going to deal with silver supply is that as these economic, either in the United States and globally, as they start to work themselves through, we're going to see a downturn towards the end of the year and into 2021. And I believe we're going to see less demand for base metals. Again, when you have oil production falls globally, and it is, as well as consumption, that means you're going to have less economic activity, which means you're going to need less base metals. So the next thing that's going to impact the silver supply going toward the end of this year and into 2021 and onward would be a reduction of supply from the byproduct base metal category. And so I think silver is really, it's the most undervalued asset to me as a safe haven. Gold is an excellent store of value, but to me, silver, because of these dynamics moving forward, silver is going to be a much better, I would say, investment as a percentage gain compared to gold on the next several years.
Now, Steve is going to be talking more about his expectations and what's going forward, and we're going to talk oil industry and a bunch more. But remember, as we're listening to this, every second counts, every day counts. The jobless rate is going to remain above 10% by year end. It's likely not to get much better in 2021 in Canada. Business revenue, it's dropped off the face of the earth. Economies of the world are all experiencing the same thing, but it looks as though the economy in Canada in particular is going to shrink around 7%. And by comparison, if you want a comparison, the Great Depression decline was around 10%, so close enough. Canada is soon going to have around 1.2 trillion national debt, and there's 8 million people now on the federal payment plan of some sort. You've got nearly 1 million mortgages being deferred and CERB looking to be extended, not once, but probably twice. So you need to have a protection portion in your portfolio. If you have the wealth to do it, this could be the best investment you make in gold and silver. Welcome back to The Real Money Show with Guildhall Wealth Management. Great interview with Steve St. Angelo. We want to keep that going. The number to call, 1-877-8-SILVER, to add gold and silver ownership to your portfolio. Physical only. This is not a paper investment, folks. We don't like those markets. It's our opinion only. But let's get back to this amazing interview with Steve St. Angelo and find out more about what's happening in the gold and silver markets. For the rest of the year, what are your thoughts market-wise? I mean, obviously, do you feel unemployment stays high? Do we see more social assistance coming to the market? What do we see by end of year? Again, we're not going to hold you to it, but we certainly would love your opinion on it.
Well, if this second wave that's starting to really build up in the U.S. continues to get larger with the pandemic, then it's a no-brainer, unfortunately. And we're going to see, and states are already doing this. States like California and Texas, California, Texas, and Florida right now, even Arizona to a lesser extent, are the states that are seeing the largest increases. And so now there's the governors are starting to reinstate. They were doing opening, now they're starting to reverse that. And so that's not good for economic growth, right? And so what we were going to see, even to my analysis, it was going to probably all start to snowball and continue to get worse in the third and fourth quarter. That's even with the recovery with this pandemic, let's say, diminishing, but we're seeing an increase. So I do think the economic situation will be even worse towards the third and fourth quarter and into 2021. Now, what happens with the market depends what the Federal Reserve and central banks do. And also the government, right? We could see another bailout package, which I believe is a pretty good probability that they're going to come in and send more checks to people because 30% of Americans didn't pay their mortgage payment their home payment in June. And so that's a pretty big number. And so what does that look like in July and August now? And so if we start to see that, even though the economy can continue to roll over, the valuations on the stock market may continue to go higher due to the Fed printing. So either we're going to see these valuations go up, which would probably pull the precious metals up. And the two options I see, the metals will go up with the market, or the metal, the paper prices could go down. If either way, it's a win. If the prices go up, the paper price of gold and silver, you're going to see more demand physically, which we're seeing right now. If the prices fall, you're going to see more demand, and you could see actually higher demand, just like what we had in March and April when a lot of silver and a lot of these dealers was wiped out. And so I do believe we can see some very interesting times over the next 6 months, but to me, you don't want to time this market. You definitely want to be acquiring some physical gold and silver. You could always get more, but if you don't have a good percentage of that in your portfolio, it's not wise to try to time this. There's just too much volatility, Darren, in the market.
So as we're listening to this show, we've discussed a lot about what's similar to the U.S. and Canada, and Steve has shed a lot of light on what's happening down there in the U.S. and how it impacts gold and silver in his expectations. We're about to go into a question about the oil industry, which is where he really shines, and I want people to know that as we're discussing all of these unforeseeable things a year ago now happening in Canada with the economy shrinking and what it looks like in terms of national debt, and what we talked about Trudeau spending this week in terms of $343 billion, and it being similar to what we did in World War II and hasn't been the same since. There are outcomes, and I want people to know what it potentially means as an outcome. This is going to mean, folks, that you will have the potential for higher personal and business taxes, the potential for a rise in HST. There's the potential for higher wealth in inheritance taxes, higher rates of land transfer taxes. There's going to be a larger reach from the government into our daily routines. There could be a higher capital gains inclusion rate. I mean, the question is, how do we turn this tap off as we go into the end of the year? And we might not know the answer yet, but I want to encourage people to think about precious metals ownership, about having gold and silver in their portfolio. Speak to the ones you trust and discuss with them the notion of adding some gold and silver. Remember, gold's up 20% this year already as we tape the show here on Friday, and silver is up 4.5%, both performing better than the stock markets. And last year, again, tremendous years for both metals, but we can help you here at Guildhall to get some gold and silver in your portfolio. The number 1-877-78-SILVER, or the website guildhallwealth.com. I want to return now to this interview with Steve St. Angelo. He has more to say, and really this is one of the most important questions that we're going to ask of Steve today. All right, well, this rolls into the next question, Stephen. Honestly, with all of the things we've talked about today, there's a lot to take in, but the remainder of today's show, I want to focus in on something that has become kind of the mainstay for you as an individual. And when we talk about your biography, where you've come from your initial stages back in the early 2000s up to what you started understanding and researching in the first decade. And that pertains to my next question, which is about the oil industry. It's also something I know you follow very closely, and by extension, our oil industry in Canada has all but collapsed with low oil prices and now this pandemic. We've also had failures to reach a conclusion on transportation methods for getting oil to the rest of the world, and specifically down to your country. And I know we're not the only ones facing problems in the oil industry. Talk to us a little bit, if you will, about what's happening in the U.S. right now and how this might all impact the economy.
Yes, you see, when I first got into the precious metals, I was really interested as them to protect, as an investment and to protect wealth, was because of all the money printing and the loss of the currency value. As time went on, I realized that energy is the number one driver of the economy, not finance. Finance steers the economy. Without energy, there is no economy. And what's interesting, this is a perfect example of what I'm talking about. I started watching CNBC more regularly with this pandemic just to see what the analysts had to say. And so there was a group of them on the screen, and one of them says, energy has been underperforming. I don't care about it. Why should I care about it? It's only 2% of the S&P. Well, that's hilarious, because without that 2% energy, there is no S&P, and there is no economy. And the number one energy source that runs everything is oil. That's the key source. So to me, to understand where we're going, we have to understand the oil. And right now, I've been forecasting that the U.S. shale industry, which has brought on, people need to understand that, the growth in the world in the last 10 to 12 years, the U.S. has been responsible for about 75% of the world's oil production growth. And without oil production growth, you don't have any economic growth. It's as simple as that. That's the simple equation. So if you have falling oil production, you have falling oil consumption, which means you have declining economic growth. And so the thing is, the U.S. shale industry was going to get in trouble with or without this pandemic. The pandemic just pulled the rug out from underneath it. And now we see that the U.S. drilling rig count is down 75%. Actually, it's down 73% since mid-March.
Jeez.
I mean, that's only 3 months.
It's crazy.
And it's down even more in the last year. And without drilling all these wells, and last year the shale industry drilled over 14,000 wells to increase production to about 7 to 8 million barrels a day. What's the most important factor is shale production in the United States declines 50% a year. 50%. It is we lost 4 million barrels just about in 1 year. So you have to replace that with a lot of new wells. And when you just lost 75% of your drilling rigs, that's going to start to become a collapse in U.S. oil production over the next 3 to 6 months. So I think the issue is the world was going to start having difficulty with oil due to the peak of unconventional, and now we're starting to see that take place. I think with this pandemic, what it has done is that it has sped the process up. A lot of this oil that we've been producing in Canada and in the United States is not profitable, and so what's going to happen going forward, I think the world is going to start seeing a peak in unconventional oil, which means when that occurs, then global growth is over for good. There's no plan B. Renewables won't do it. And so that's when you need to be moving from growing wealth or building wealth to protecting it. So the smart investors in the world need to start transitioning from building wealth to protecting it. And that is my new analysis now. That's the next phase that we're entering into.
First of all, say how amazing it is to find somebody so aligned with the way that the Real Money Show interacts with the public in terms of their thoughts and Guildhall and their feelings towards the ownership of gold and silver. And how we get there may be slightly different, and your interest in research done in the oil industry is amazing. It's incredible. And we love having you on the show. We want to thank you for it. But if our listeners are hearing this right now and they'd like to get in touch with you or they'd like to follow you a little more closely, what is the best way for our listeners to get some information about Steve St. Angelo?
Well, thanks, Darren. The best way is go to the SRSRockerReport.com website, and I put out between 3 or 4 articles a week on the precious metals, the mining industry, the economy, and, of course, energy. And without the energy, there is no economy. And I also have the SRS Rock Report YouTube channel, and I try to put out at least 2 to 3 videos a month. I'm going to increase that. And so there's a lot of good archived information there, but I would like to conclude that if you understand what's happening with energy, that's the sound reason why you own the precious metals. And because there's this notion that the central banks can continue to manipulate the market, and that's true, and they could do it forever. But the energy will pull the plug, will pull the rug out from them. So when you understand what's happening with energy, you look at that. Then you understand why it's so important to stay in the precious metals, because they will be some of the best assets to own going forward.
Well, we want to thank Steve for being part of today's show, The Real Money Show with Guildhall Wealth Management. And Steve, we want to let you know you're welcome anytime. Our listeners have indicated they love having you here. We've had a lot of requests from listeners to have you on the show, and your input is invaluable. We wish you all the best, especially during this period. Stay safe, and we look forward to speaking with you soon.
Thank you, Darren. Yeah, we should touch base in a few months to see how things unfold.
Let's do that, Steve. Thanks again. Steve St. Angelo of the SRS Rocco Report on The Real Money Show with Guildhall Wealth Management. All right, that's a tremendous interview with Steve St. Angelo. And again, a big thank you for our listeners on behalf of them and Guildhall for having Steve on the show today. What a fantastic way to experience a different opinion, a different viewpoint, and to tie that into oil, which is not something that we talk a whole lot about on The Real Money Show. But again, the points to take in from today's interview with Steve is basically that the economies of the world are all sharing this experience together, and we're all dealing with pandemic. We're all dealing with the fallout from the stress that this has caused in our economies. But here in Canada, it becomes very important to understand that if you have the wherewithal and the budget to do so, that you need to be educated about what the future holds. There is certainly a lot of information out there. Our show is but one place where you can go, but we'd love for you to be part of this by owning gold and silver. The number to call, 1-877-8-SILVER, or the website, guildhallwealth.com. And I will remind people, in 2008, when the whole system broke down, it took 3 years, 36 months, for the price of gold to go from $650 an ounce all the way to $1,920 an ounce, while at the same time silver ventured all the way from around $8.50 as a low in 2008 all the way to a high in 2011 of $49. Should that repeat itself today over the next 36 months, gold will be going up above $3,000 an ounce. Silver will be venturing up above, again, $60 to $70 an ounce. So a tremendous position to be in for those that can take advantage of it. And ultimately, when we look at Canada as a whole, there are a lot of questions that have not been answered yet. We don't know how this is going to play out. We don't even know if there's going to be a return to normality anytime soon. People feel very, very differently depending on where you go and who you talk to about what is happening. But the common thread is that the uncertainty that lies ahead will more than likely drag our economy through some type of very serious recession. And if you are prepared, perhaps diversified in your portfolio, you may stand a better chance to protect yourself. Again, use your financial planner, your advisor, the people you trust, do your due diligence, and understand this better than the next person in order to know how effective gold and silver can be. Remember, gold has been averaging throughout this entirety since 2002 when we opened our doors, 10% in Canadian dollars per year overall. That's a tremendous, tremendous overlooked aspect of the value of gold in a portfolio. Silver's been doing the same thing. And what this potentially means is to remember the outcomes are what are most important. All of this money spending, all of this debt accumulation, all of these jobless rates and the workforce being idled and comparisons to Great Depression and all of that, it hasn't played out yet. Right now we're just seeing the immediate effects, and everybody is feeling pretty confident being supported by our government. What happens when that support ends? Where do we go with CERB? Where do mortgage deferral payments go? We want you to look into this. We want you to understand more about it. So for us, owning gold and silver makes perfect sense.